Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, June the 16th, 2026. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. Just as a reminder, we have a new contract on this platform in Windsor Direct, and we need to go to the U contract. So I had to do a little bit of that before class or as I was starting out. So just a reminder, go ahead and update that if you're using this and tracking the dollar index here. High level overview, wave 1 is done, working on wave 2 down. Eric, is this over and we're ready to go blasting off, or do we, Ian, go lower? Emil, do we sideways? Still kind of stuck in the chop. Is this ready to break out? Maybe, but we still got this zone, which is a battle zone, former resistance over here many years back in 2014-ish. And then it kind of held when we went a little bit above. We retested as resistance, tried again, spiked way above, but you can see where we tested multiple times, went lower. Then as we finally did the rip up to that 114.72 area, which we talked about going to 115, maybe 120. Not bad, a few ticks away from that 115. Then 4 years ago, almost 4 years ago, we talked about having the big correction off of this big move up. We're looking for that correction. So we spot, looking at this, we said, man, it's time to short the dollar because this thing's going to go down. And even after this correction up here, kept saying this isn't the breakout just yet. We still need more downside. So was this latest downside enough? But even after all that, we've been chopping at that same battle zone for a year. We were support over here, resistance over there, back to resistance. So do we break down further or do we break out? Either way, ultimately, we're going to go breaking all-time, this high. En route to 130-140 is kind of the target. So is this ready to start doing that now, or do we still need to go lower low? And I've been saying for many months, all these swing point lows, I'm not sure that's it. I think we still need to go lower. We went lower, set it again and again. So we're at this low, and I'm still not convinced that this is done until price proves otherwise. So let's jump into the charting platform and look more particular at these levels. This green line is that level we were watching on that other chart that we've been battling for well over a year now. And as we go back here, you can see we kind of popped above for a temporary period. We went right below, retested it, failed, tried to rally, couldn't break it, rally, couldn't break it, tried again, still failed. And as of late, we tried a few times, failed. Now we're kind of getting in the same area. Do we break out? We get above this level around that 100.5. We're going to go up here toward that 100, 101.50 area. Maybe we push towards 102, but we got to get above this line. Very critical. We get above basically that 100.50. Roughly about a point from where we are. We need to close above there. None of this little spike up. Ooh, looks like we're going to break out and it fails. We got to close above there on a daily chart. then would kind of set the tone. We're going higher high. Higher high than the swing point would put us in this target zone. Well, what if we fail and we start breaking below the magic fibbo? We do that. I'll zoom this in a little tighter for you. We start failing and drifting lower and close below that swing point right there. Big cursor. That swing point right there, we close below that, sets the tone. We're going to test the prior support zone. We break that, we're going lower low. Right, here's the bigger support zone, smaller support zone. So this looks like a 3-wave up. So if we start breaking below this low right there, sets the tone. We're definitely going to test this. And then if we go lower low, we go lower low here. If we don't hold the support zone, we're going down here. No ifs, no buts, no ands. We either break out and go up here, or we push lower, bounce here to go higher, push to this area, bounce to go higher, or if we don't hold this, definitely going lower low. Fair enough? So let's stretch that out even a little bit more. You can see this price action, as we talked about for weeks and weeks and weeks. This thing is probably still going to go sideways until price breaks above its support or breaks below its resistance, or break above resistance or break below support, excuse me. And that would set the tone to these targets, but we're still stuck. How long have we been talking about that? We've been in the same sideways chop going back a year ago. Pretty much going nowhere. Yes, there's points in here and a little bit of movement, but basically we've been tracking in a sideways direction. So is this finally going to break out, or is this going to break lower low like we've done over and over and over, still running up to the same zone, failing, and ultimately going lower low? Well, we have a tool that we look at on higher time frames. We use it in all time frames, but it's the Fibonacci retracement theory. And it's not really a theory, it's my go-to bread and butter. From the prior low of COVID over here up to the high, if you break down and close below a 618 level, it sets the tone. 75% chance we go see 85 down here, but a 70% chance we go visit 82. Well, we did close below that 618 not only once, but for multiple weeks and even months. So we have a weekly candle bodies below that level. We even have a monthly candle body below that level. And it's just kind of saying that up and until price proves otherwise, we still have a 75% chance we got to go lower low. Well, that is not conducive at this point to breaking out, breaking a new high above that 114.70. Well, just remember, this is a wave 2 correction coming down. Yes, it could go deeper, but it is a wave 2 correction. And once that's over, we're definitely going to go breaking higher high. What is the target for the higher high? You go out to the monthly chart. Our target is up here at 130, 140. Do I think we're going to reach this target? Absolutely, I do. What's the time frame? That's the toughest part. Could be a year, could be 2 years, could be 3 years. Could take some time. I do know if this is the end of that correction and we, don't go lower low and test these, then all roads still lead to the same conclusion. If we've bottomed already, we're going to go up here. We go lower low, we're going up here. We actually visit these targets over here, that 85, 82 we just talked about being 75% chance we're going to visit that. We go down here, we still go up there. Everybody good? One thing this is not is going lower low over here, because this is simply a correction before going higher, not a reversal to go lower low. So far, so good. So we're stuck between resistance and support. Well, if this is still a high probability target, so I'll go back to the weekly chart so you're not looking at this. Go back to the weekly chart. What I want you to focus on, yes, this is 75% chance we go lower low, 85.50, 82.25, until it's not. Where is the switcheroo? Where do we totally rule out this is now off the table, and we start ruling in we're going up here. Or just as I remember, and I said, we're definitely going up here. The question is, do we need to go lower first to complete that wave 2? Then we move up here, or because we're chopping in the zone, are we setting up a push higher? We could still set up a push higher and still go lower low. So where's the rubber meets the road is this big pink box. That big pink box sets the tone. All roads lead to these lower lows, which again could take months, could even take a year, go into next year before we get down here. So there's no time limit to say, well, ladies and gentlemen, if we don't get down to 85 by exactly December the 1st of this year, then it's logically impossible for us to then get up here. No, there is no time limit on getting down here. What separates it is if we're going to get down here, we cannot get above this pink box. We get above this pink resistance zone, game on, multi-year run toward that 130, 140. This is the destination. The question is, when we talked about our destination here needing that correction, was this enough? Sure. We did basically about a 50% retracement. That's about enough. It's between the 618 and 786 level on this COVID low, but it's right near a 50% retracement off the swing point low. We originally talked about this. So right around that 92, we dip down about 95. It's right in that area. So is it possible this could be the end and we go breaking out? Yes. All remember is that we wanted a correction before a continuation. And this is the prior up move. This is the correction. And then the next move is up here. But this could still last another year or so coming down. And then we go up here. Well, how do we flip the script from high probability targets down here to this extremely high probability target up there? We got to clear this hurdle. It's a big hurdle, but we got to clear it. So far, so good. You go back in time, this is where I'll go back to that monthly, you can see this has been a major battle zone when dollar index first started plotting, at least on this chart. We came down and kind of tested the top side, bounced a little bit, went lower, retested, spiked up to the top of this zone, broke back down. And you can see how often we tested that zone. Broke above, retested, went higher, pulled back to there to catapult to all-time highs in the 70s, 80s, in the 80s. Then we came back down, tested this zone, broke below, retested it, went lower, tried to break out, tested that zone again, went lower. So you can see we've been making these lower highs for a while. That's why we're due for one of these. I'm not expecting the dollar to break and go all-time high up here. I'm just looking for a nice hearty retracement. Guess where the retracement zone is? From the current high down to the current low. This is why these numbers always come into play. We're looking for this correction to make a move toward the 1.618 or the 786 zone. Guess where 130, 140 is situated? 618, 786. So Harold, I'm not looking for this thing to just go ripping and blowing new highs. I'm looking for this thing ultimately to correct and do a 618, 786 type of retracement. Sound familiar? On the downside, we were looking for that 618, 786 type of retracement, right? Always comes into play. So do we break out now or do we break down further before then we go up here? What is the likelihood we go to that 130, 140? I'm about 1,000% confident on a 100% scale. That's pretty confident. Just like I was when we rallied up to 114 over here. I talked about that saying, actually over there, I talked about getting this correction we're working on now. And that's what we're looking at. So big picture off of our MetaTrader chart. This is the low over here, 70.65. And this is the run up, which we talked about during these years that we were going to make a run toward 114, 150, well, 115, 120. We topped out at 114.72. About 4 years ago, we talked about this big correction coming. And I was looking for a deeper correction. So off of this low up to that high, I wanted a 618, put us around 88, 87 zone, maybe as deep as a 786 toward 80. So I was looking for this deeper retracement. Is this off the table? No. We got to get above that 105, 108 zone to set the tone. We're not going lower low. We're going starting to break out. Well, that has always been the plan. At some point, this wave 2 will end. Do we get down here? Is this the end, or do we turn around somewhere in between? We're going to go breaking out. That is totally the plan. Only question is this swing point low over, or do we still got to go lower low? Well, from the COVID low up to the high, we broke the 618, which says we likely going lower low of this low, which puts us at the 85, 82. And guess who's right in the middle of that? 618, 88, 87 zone. So 85 is below that. And then the 82 is below that, obviously, but it's right in the neighborhood of that 786. So are we going to get this 618, 786 retracement zone here before then we go on the bigger picture, 618, 786 to the upside? Wow, pretty interesting, isn't it? So in closing, I'm not convinced this is the low. We know what we have to do. Price has to prove itself before we can confirm we're en route to 130, 140. It doesn't matter if we break out now, we're going to 130, 140. Or we go lower low into the zone, and then we go breaking out 130, 140. Or we truly take out the COVID low and hit that 85, 82 zone I showed you on the charting platform. We get down there, we're still going to 130, 140. So that's why I keep switching in between, because it's so easy to show it. This is what we're looking for. Longer term, we're going to get a 618, 786 retracement. The question is, from this low to that high, do we get to the 87.50, 80 range where that 85, 82 is sitting? That's a higher probability now, up and until when price proves otherwise. Where's that happen? This pink box. Pretty clear, isn't it? We break above this, it's over, we're going up there. We stay below this, we keep going lower, then where's the target? 85, 82. We could stair step and not quite reach this and still go breaking out. So whether we do it now, go a little lower, do it, or we actually come down to these targets, we're still going up here. That's what I meant by all roads lead to 130, 140. Probability is extremely high. Only question is, at what point do we call it quits? Got to get above this big pink box. In the short term, could we actually break out, make another little high over here and still go lower low? Yes. From this recent high here, and you'll see why these levels are so important. See where my 618 zone is off of that high to this low, up here around that 107, 108 level. We clear that hurdle, then we start talking about, yep, that 85, 82 down here is off the table. We're above this pink box. We're going to 130, 140. See why it's so important. We get above that 108 level. It says we got a 75% chance we're going higher high to these targets en route to what? 130, 140 up there. Well, even if you take this high to that low, that was that second swing. We got the initial move down, retracement, next push. Even if you use that swing point high down to the low, look who's in the middle of this pink box, 618, 786. So in order to go higher high, we need to get above 108. Kind of rings a bell, ding, 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 ding. I pushed this a little further because you had this price action up here, and we have a little battle zones over here. So I stretched my pink box a little bit into the 109 area, kind of where we kind of peaked out over here before we reversed. but the rule is the rule. We get above this 104, 107 level, says we're likely going 85% to 112, 114, which is still below that swing point. So still kind of sets the tone, but by getting up here, we clear the hurdle of this bigger one, which sets the tone. We're going to 118, 120 en route to what? 130, 140. So this guy right here, big pink zone, we get above it, it's over. We're not going down here. Up and until we break this zone, there is still a higher probability we got to go lower low. So what does that mean for this price action? It's chopping and grinding. That's what it's doing. So let's go back to the daily, zoom this in, look at the current price, which we've been started the conversation with, that we're stuck between support and resistance. And we thought we were going to break out. We came back down, test the support zone. We got to get below this support zone to set the tone. We're going lower. We don't hold this, we're going down here. We don't hold that, we're going lower low. Got it? So you can continue to rinse and repeat these type of things. What is this box? Guess. From the low up to the high, it is my 618786 zone, right? Kind of stretch them out, get it more proportionate. From that recent low, and there's a little tool you can use, hold your control key down, and you move this, let me get this out of the way because of that blue box, but you can move this line and it'll lock it in at that low. So you don't have to worry, did I get it exact? And then the same thing with that swing point high, you just hook it near that candle, it'll automatically lock it in. So you hold control key down, drop your little corners here, and it gives you the exact high and low. There's my 618786 zone. So if we break this magic fibbo, which is also a very important zone, we don't hold this, we're going lower low here. But notice where lower low is. It's in the midst of this other support zone. Well, lo and behold, ladies and gentlemen, where would this support zone come from? It's always about the magic of a 618786 zone. So we got this swing point low here to the swing point high up there. And look where that 618786 zone is. So when you see these boxes on my charts, generally speaking, it is my either battle zones where you can just go across and see price action. Back in history, every time it turned support, turn resistance, turn support, turn resistance, the stronger that battle zone is. Or it's simply the 618 type of retracement zone. So it looked like we were going to break out here, but I kind of warned you about this. This isn't a given because our software was starting to get overbought. Our weekly on the dollar index is back in overbought territory. Our daily is in overbought territory and it's starting to turn down. So that's why I warned you last week, thinking, well, it looks like it wants to go breaking out. And what do we say, Mr. Tucson? Hey, wait a minute now. We got a weekly getting overbought. We got a daily overbought. We need to see how price action reacts when we trigger lower, PAI hook and cross lower. And right now we have steep slope angle separation pushing lower. Why are we starting to bounce? Well, the magic of this software, it's called the Market Price Anticipator software. It anticipates market price, not after the fact, but kind of gives you insight ahead of time. We can anticipate this was going to happen. We set it while that was rallying up, engaging, disengaging, just grunting, grinding, making the cycle, that this was probably going to bog down in that same area. We're still at a lower high. That is still more bearish than bullish. From that bigger picture, high to low, from that COVID low up, and that pullback, we broke the 618, which says we still need to go lower low. So this is kind of feeding into that. But why do we get a push and why are we trying to bounce just a little bit? Anybody want to guess? When you get a PAI hook and a trend momentum cross, and this is on a daily, right? Daily, PAI hook, trend momentum cross. What is PAI? The only AI you need to worry about. We're going to talk about what's going on in Korea. If you have exposures, all of our members out there, you have any exposure to KOSPI, EWY, Korean ETFs, especially KORU, that's been ripping. We can review some of those later, but they've been ripping. They got a credit crunch and a bubble that's about to explode over there. What's interesting, there's about 52 million people in South Korea, and there's like 102 million trading and broker accounts. That means every person, including young kids, children, everybody that's there has roughly 2 brokerage accounts. And they're borrowing on leverage. Maybe they're trading the markets during high school and during the PE or wherever they are, trading it. But they're already starting to shut down access to funds through the banks to trade on leverage. And what happens when you trade on leverage? When things are going up, it's great. It's like the smartest thing I ever did. I took this money and I borrowed it and I made a big move and life is great. But when margin calls start happening, it forces the broker to liquidate your stocks if you don't have the money to cover it. Then that's going to push stock price down, which the more your stock price pushes down, it's going to cause more liquidations. And that's a massive bubble. Even Goldman Sachs, they love to take care of people, but they went out there and said, you need to be protecting your investments if you have any access to Samsung, SK Hynix, TSM, any of the big chip makers over there, because when this bubble bursts, it's going to force the stock price to crumble. And then, yes, if it does, then we're going to buy it up. They're tremendous chip makers over there. But this scenario of leveraged products and the scenario that's going down is going to force, man, I can't wait. Emil, we get a big drop in KOSPI, EWY, KORU, and those are talking about the leverage product. What happens if it makes a 50% drop in the stock price? Well, if it's leveraged 2x, it drops 100%. If if it's 3 times the leverage, then it's going to drop 3 times that. That means it totally wipes out all those gains and then some. Could even bankrupt the KORU fund that's just been insane. Talking about a bubble waiting to burst. I'll show you those in a moment, but I wanted to throw that out. If you have exposure to any of that right now, please take profits. And there's a way you can do it if you want to protect the downside, is you can sell call options way above the money, use that premium to then buy a zero cost put spread collar below. So if prices do take the crumble and the tumble and you got profits locked in, then that zero cost put spread collar will help you protect your downside. Yes, it'll cap your upside, but it'll also give you free protection to the downside. That's the way the big dogs play it, and the way even Goldman Sachs is warning their customers to do that. So I definitely think it's coming. When you have 52 million people, and of those 52 million people, including children, all the above, they have roughly twice as many brokerage accounts, 2 for every person. And that happens, look out. It's going to give us an opportunity after the bloodbath hits, and give us a great opportunity to buy low and invest in those stocks. All right. I digress, but what does that got to do with this dollar index? When you get a daily hook and a cross, what happened? The 4-hour cycles down. Pretty simple. Daily hook and a cross, the 4-hour cycles down. Why are we getting a little bit of a bounce? The 4 hours depressurizing. But my 4 hours trying to break above with a daily pushing lower and a weekly overbought. Not saying it can't possibly go higher, but that's why I warned you when this thing kind of popped last week, kind of pushing higher. Don't fall for this. We're going to get that pullback. The daily's overbought. My daily hooked and crossed. We got the 4 hour to cycle down. And if the daily continues to cycle, what happens? This 4 hour slingshot's lower and lower and lower, and we just keep grinding. So expect more chop. That's a given. But the software set this up last week as we were getting overbought, kind of talked about it, said, look out. We're likely going to get a pullback. Do we hold support, bounce to go higher? Do we push and not hold support, go lower low? And on this, you can use Ichimoku Cloud. That kind of fits where my charting platform is. And the support zones are the same as the Ichimoku Cloud on a lot of those different time frames. So it's amazing how often the Fibonacci levels line up with Ichimoku Cloud, vice versa, etc. That gives us visual aids. That's why I like Ichimoku Cloud. What about the fact that this daily starting to push lower? If we cycle down, anytime you're above the cloud and the daily cycles down, you're going to go back to the cloud, right? You get a daily cycle up, you're below the cloud. Where do you go? You go into the cloud, kind of like a magnet. You cycle down, you're above the cloud, you go into the cloud. You're below the cloud, you cycle up, you go into the cloud. Below, cycle into the cloud. Above, cycle down to the cloud. And it could go further, of course, but that's part of your visual levels. And guess what? From that low to that high, where is this zone? Anybody want to know about a 618786 retracement zone? How do you know? I can see it. I don't even need to put the graphs on here, but that's what this is. Prior low up to the high, that's that 618. And this most recent move, same zone. It's beautiful. Again, I digress, but you get the point. So Ian, I'm not trying to tell you, my friend, we're going down here. Higher probability still says we got a lower low because of that bigger picture, that COVID low over here. We broke the 618. We still have a 75% chance we got to go visit down here. But up and until then, as long as we're below this, this is more viable target. And yes, it could take a lot of time. I said it would be multiple years on this correction. And here it is. We're about to be 4 years into this correction, and it could still go longer. Sure. But when does this off the table? You get above the pink box. And as long as we're below the pink box, this is still on the table. Now I'm going to throw some more out at you. 102. This prior move last year, the biggest trade, I talked about it. I guess we're a little bit ahead of our time. We anticipated this when a monthly was overbought, weekly was overbought, daily was overbought. And I warned you about, we're going to get a big correction over the next multiple years. And my month is going to start turning over, and we're going to start to see this bigger move down. And yes, it's going to take years. We got it. Well, the big money finally got on to my market forecast. And last year, years later than what we discussed, the initial move, that they were going to have this short squeeze. Let's short this thing. Nothing but the dollar, anything but the dollar. Short the dollar, short the dollar. So there's a level at this 102 level. At 102 level is where I believe, in my humble opinion, a short squeeze will happen. So if price can close above 102, go long. The dollar's going to pop up to this 105, 107 level. So we're talking about a 3-point pop, could be more, and might even be what sets this up where we actually start breaking out and warranting our multi-year climb toward that 130, 140. Now, just because we hit the short squeeze and we pop up into the zone is not a given. Well, that says we're definitely going to 130, 140. Yes, I hold on to that as a statement, but we could still get that bigger retracement, fail, and still go lower low. So this stays viable until we clear this hurdle. Not because we go up into it. That's not enough. Short squeeze at 102, yes. Without a doubt, in my humble opinion, the short squeeze will kick in, and this thing is going to go ripping toward that 104, 105, 107-ish level. So you're talking 3+ point pop on a short squeeze of 102. It could ignite the fact, the follow through, and we ultimately clear this hurdle and onward and upward we go. So remember, it's 130, 140 is the ultimate target, but this would be off the table should we clear this hurdle. Not reach it, clear it. And it's up to me, and that's my job to turn by turn GPS coordinates between my God-given talent to read and interpret price, the Fibonacci levels, they break, I go with 75% chance we go on higher high. We got to get above that before we can focus on this, just like we got to get it here before we can focus on going up there. But this is where it switches direction. We get above this, we're going. We stay below this, we still have a higher probability we're going down here. Fair enough? I know we spend a lot of time on this. Why? The dollar index is made up of a basket of currencies. In that currency, most predominant is the euro dollar. And that's why wherever the dollar goes up, the euro dollar goes down. And when the dollar goes down, the euro dollar goes up. And plus, wherever the dollar index is headed, you know where a lot of asset classes are headed. Fair enough? So up until we break this, this is more probable. And then if we do break it, then the target is at 130, 140. So what is the euro dollar doing? It's doing the inverse. When the dollar dropped, the euro popped, right? When the dollar dropped, as it kind of peaked out, the euro was down here finding support. The dollar reversed and went down, the euro went up. So there's opportunities that I mentioned last week, kind of got in this just to be getting in. We're up 42 plus points. What do you do in this case? You could do the PE +1. You push that little label, automatically pushes your stop loss into profit. Now, Mr. Tucson, this is a winning trade, no matter what happened. I could take profit 1. I can click that, and it would take the 43 points. You want to see what that looks like? Click that. Boom. Congratulations. You have now reached. I got a little saying for you. I won't repeat it and let you hear it when you hit it. Well, now this is not only a winning trade and we can't lose, we locked in profits. On-screen programming, or it does it automatically for you. Do I think this can climb higher? Well, we still got a higher probability we're going to go higher than we go lower. But what if, William Bruce, it doesn't? And maybe we slingshot back down and we go lower low. Then it'll pip us out for profit. Even more profit since we already locked some in. So far, so good. Well, where does that look like we're headed? You look at the euro dollar. We do the same thing we did a moment ago on the dollar index. From the prior move, this high to this low, the dollar, when I showed you the COVID low up to the high, we broke the 618 and that 85, 82 target. That's still a higher probability. What's the inverse for the euro? From this high to this low, we took out the 618 around that 112.80. Did that way over here back in April of 25, so over a year ago. That said, based on that daily candle body close, not a wick, but a candle body, 75% chance we go on to 127.50, 70+% we go to about 131. I still think there's higher probability we go higher, but ultimately where we're headed down to 0.8, 0.7 zone. So I'll remove this so I can condense this a little further. This is the 130, 140 target for the dollar. When the dollar hits 130, 140, rest assured, the euro is going to be down here in that 0.8, 0.7 zone, or potentially lower, but that's the plan. All roads lead to these lower lows coming, but I'm not convinced that we haven't finished this correction to the upside. 75% chance, 127.45, 70 plus, 130.99, 131, close enough. 130.99 and 6/10, that rounds off to 131. So Emil, we're going to get up there. That would be an ideal place. William Bruce, what if that continued? Well, remember, almost 4 years ago, I said, hey, No buy, sell, the whole recommendation because I can't tell you what to do. I'm not a certified financial planner. I don't even play one on TV. But I said this is a great opportunity to go long the euro because it's going to make thousands of pips in a multi-year correction. But what happens if we get up near these targets? Short that back down. You're talking thousands of pips to get down here. This is where we're headed. The question is, can we get up here first? And when we do, I'm going to establish a longer term short position, as I've been in a longer term long position during that correction. So is it over? All roads lead to lower low. Whether we go breaking out to reach these targets, which is still a higher probability, or we break down, where's the rubber meets the road on this one? Same rule. Low, high. This big support zone, we break below that, we're going 0.8, 0.7. Got it? As long as we're above this, still more logical, we need to go up there because of this high, low, 618 closure. Later, this 1740 area, we closed well above that as well. We went up to that 121-ish level so far, well above that. And currently, we're almost back above it again, right? 116, 117, we're not too far away to get back above it. So still more logical, we need that before we go down here. Amen? All righty, same rules, but that's why I get into position of authority. We said it here, made a lot of pips, talked about a correction, then we made a lot of pips, another correction, still probably got another push, still likely until it's not. When is it's not? You break the 618, 786 zone and we go lower low. All right, there you have it. So from that low up to that high, 618, 786 zone, battle zone, it looks just like the dollar index. Go out to a monthly chart and push this baby out. And you can see how it interacted with price during this long-term decline. Those of you that have been with us for many, many years now, which is the majority of you, that when this thing reached all-time high, I made a bold statement. I don't do predictions. The weatherman predicts, every Tom, Dick, and Harry out there, my prediction, I predict this, I predict that. I leave that to the prophets, but I can anticipate with the best of them. That's why our software is the Market Price Anticipator software. And from that point here, I made a bold statement that the euro was headed to below parity. Took 15 years, but it still did it. And we got lower low. Then here we talked about, hey, it's time to go long for a while. Multi-year rally totaling thousands of pips. And then when we get that lower high again, we're looking for another lower low. Why did I kind of target this zone? I'm looking for that potential 618 retracement. Could we go further? If the dollar pushes down toward 80 and extends that 85, 82 zone down towards 80, then this is going to push the euro up toward that 140 and change. Right? So we get a 618 on the dollar, which would be 87. We should be up here somewhere around that 136 area. We push a 786 on the dollar, pushing more down to 80, then that should probably push us more in that 140, 145 zone, pushing this toward the 786 on the euro. Fair enough? But this was never about, let's buy this because this is reversing to go break out. We're simply looking for that retracement and then the lower low. Fair enough? So how does that graphically look like on a chart? Graphically, that looks like, I believe I have it on this one. That looks like this. We're looking for a big ABC correction. And I got to compress this down because it's been a while since I've done this. But we're looking for that bigger correction. And if we can get up to where we expect to go to, all this is this multi-year retracement is a B wave up. And then when we finally get there and reverse, we're coming in a C wave down to that 0.8, 0.7 zone. All right. So all this is a B wave up and a C wave to come back down. Multiple years, which still could last a few more to get up here, then I would say multi-years to come back down. Big picture. But that's what we're looking at. ABC, as easy as 1, 2, 3. Boom. We're coming down here. The question is, was this 121 pop up here the end? And we're working on breaking down now, or do we go higher to then reverse? Well, I keep going with the same rule. I don't break the rules, I follow the rules. And the rule is, as long as that high to low, we took the 618 out, that said 75% we're going there, 70% we go to what, 131. But later we broke above that 786, which is a reconfirmation of the same outcome. So not only did we get a confirmation, we reconfirmed it by breaking the 786, which puts us right in that same zone. So that's why I keep buying dips and expecting this to continue. Once I'm in a position of authority, it doesn't matter what it does. It could plummet and it won't hurt me. I already locked in profits. I'm going to lock in more profit. And we've done that over and over and over and over for 4+ years. And it's thousands of pips, and we still have potential of a bit more to go. From 116 to 127, that's still 1,100 plus. From 116 to 131, that's right around 1,500 more to go. And the ebb and flow, you can start buying multiple lots along the way, get to position of authority, add dips. But this is still a higher probability retracement before we go lower low. But I don't want you to lose sight. Well, Gary, you keep talking about a higher probability. We got to go visit this target up here. Yeah, but all roads lead to this down here later. The question is, at some point, whether we fizzle now, we go up here, and then we do it, all roads lead to this down here. And when does this low up to this target no longer viable? If price breaks down below here, it sets the tone. This target up here is no longer valid. This target down here becomes very valid, starting out at 0.9, 0.88, then 0.78, then 0.72. This is where I think we're headed. Nice little zone, but from here, 130 area or higher, down to 0.8, 0.7 is a lot of pips, my friends. There you have it. Pound dollar's in the same boat. What do you mean the same boat? From the all-time high to this low, all we're looking for is a retracement. That's what we're looking for. So what about the current scenario like you did with the euro and the dollar index? From that high to this low, we did the same thing. We took out the 618, we took out the 786. In fact, we're above it right now, 133.78, 140.34.27. We not only took it out a long time ago, look at the pound. The pound got very rambunctious. 4 years ago, I said, hey, not a bad idea to go long the pound dollar because it's going to make thousands of pips over the coming years. And then what? That high, that low, Emil, we took out that 618 right there. That goes back in 2023, about 3 years ago, we got that. 3 years ago, that said we're going up here. 147 up to 152, 75%, 70%. I like those odds. I do. I love those odds when it was down here, knowing we're getting a retracement. And no, at the time we had this high, yes, we developed a low where we talked about going long, but as it grinded and grunted and broke above that 618, that set the tone. 3 years ago, we should go up here. Then we got our corrections and chopped, and we tested the 786, bigger correction. And finally over here in 25, we closed above, reconfirming we're going to 147, 152. That's still a higher probability, even though I'm telling you, the pound's going lower low as well. It's going to break below parity. 103 was the low, and based on this correction and next push, we should go lower low than at 103, And I'm targeting down here 0.98, 0.93, maybe even as low as 0.8. Depends on how high the dollar goes, how low the pound and the euro go. Got it? Inverse relationship. So, is this target viable? Yes, it's viable until it's not. When is it not? That low up to the current high, 618 support zone. We break below it, it's over, we're going lower low. Up and until then, as long as we're above this, especially while we're way up in the stratosphere up here, that is still a very high probability target. So we've been buying the dips in the uptrend, making thousands of pips, still looking for some more to come to play. And then, man, what if we and Bruce, we get up here? I'm looking to establish a short position for this big move down. Still could be another year or so to get up here. I said multiple years from here, almost 4 years in the mix. Still got a little ways to go, as long as it continues in scenario, and we stay above our critical support zone, that low up to that high. You can see the 618, 786 marks right there. That's the key. You break that, you're going lower low. So it's not a matter, Eric, where we're going. Well, in my humble opinion, we're going down here. Yeah. But based on that high to that low in this scenario, we got to go up here first, somewhere in that zone up here, before then we start reversing. If I'm wrong, then we've got to see a lot more downside price action. But even from this low up to that high, you can get a 618 retracement to bounce and go higher high. Who did that? Its counterpart, the euro dollar. Right? From this low, same swing point low, up to the high, we got a perfect 618 retracement out of this to bounce to go higher high. Interesting how that happened. Man, that's interesting. And these aren't exact, but you can get close enough. But you can see it's right at that 618 retracement zone. All right? And what you're looking at on that, so it didn't quite touch it. It's this low to that high. So I'll just take a few of these off for you so you can see this a little bit easier. I put these lines on the chart all the time just for that main reason. But that low, see if I can get them as exact as possible, up to that high, so exactly at 618 retracement. Don't make this stuff up. Cannot make this stuff up, my friends. And we did what after 618 retracement and held? Went higher high. Huh. Interesting. Where did we go when we made that higher high? To our extension zone. What does that mean? This high down to that low, where did we go? We went to the extension zone. Exactly. Now what? I still think there's more viable upside because of this target. That high, this low, 618's taken out, 786 was tested but not broken on that scenario. But actually, this is the euro, so we did break the 786 as well, reconfirming we're going there, just like the pound. All right, enough of that. What about our euro yen, pound yen? Be careful on the euro yen, pound yens again. Yes, they're bouncing. The markets are getting a little leverage. We got a deal. We're going to sign the deal. The deal is deal, or is there no deal? But it doesn't matter, deal or no deal. This thing is going to come tumbling down sooner than later, but no later than later. Monthly's overbought, weekly's overbought. Yes, we're grinding to a zone. But what happens when the markets crater? Every time the yen raises rates, we get a pullback in our market. When the markets crash, we get massive pullbacks and the yen strengthens. So the technical picture setting up, we need more downside. We're rallying right back into our resistance zone. And we've been pegging this for a while as well. Yep, I was the first to tell you on the euro yen and the pound yen, go back to COVID, same COVID we talked about a moment ago, made a bold statement, not a prediction. It's in the archives. Ladies and gentlemen, you might want to consider going long the pound yen. It's going to take multiple years, but I'm expecting this thing to make a 8 to 10,000 pip run. I referenced this prior swing point around that 196, that we were going to go at least that high and break a new high. So far, so good. And we rallied. But what do we know about the yen-based pairs? Dot-com bubble burst, right? Back in 99, heading into 2001, 2000, as we had a big, massive decline, 9,000 pips. Coming into 2007 financial crisis, what happened? The markets crashed and we had a massive lower low, and this thing went down 13,000 pips. What's the next market crash going to be? Elizabeth, I'm coming to join you, honey. Is it physically going to be AI bubble that burst? Is it going to be a currency failure? Is it the commercial real estate, 5 trillion and counting, commercial real estate bubble that burst? What's it going to be? It's coming. There's already many cracks in the foundations, and we're starting to see that with the Korean scenario. Talked about that a moment ago, but we'll get to that in just a second. But this is looking for a big correction coming. Do we go into next year's kind of the plan? Maybe it happens then. Is this going to just continue forever and we never get a crash? No, we're going to get it. And when it does happen, this yen pair tends to strengthen big time, which means the yen is in a secondary position. This pound yen goes down. And what if we split the difference between the two financial crises, 9,000 and 13, and we go 11,000? Still, 10,000, 5,000, 1,000, 500 pips, a lot of pips. Potential is very, very high. We're going to get this thing to do the same thing it did the last two financial crises. We're going to do it again on the next one. And believe me, the next one is coming. All right, there you have it. So in closing, could these go a little bit higher? Yes, they're rallying right back into the resistance zone, both the euro yen and the pound yen. Didn't mean to move that, but I will. I always grab the wrong thing. It's right back in that resistance zone. Be careful. We still have a lower trending high line, and we're back into resistance. We've been testing it and testing it. What if we can clear the hurdle? Then we look for a couple of hundred more points toward that 217, maybe 218, right? We got to clear this hurdle. We got to close above that swing point. We do that, then by all means, we could scalp up toward another couple of hundred points. Otherwise, be very careful for a reversal. Many reasons. This little correction is out of sorts. We had a very impulsive move down. We chopped and grinded, and we got all this overlapping price action, which still suggests we got to go lower low. And then you go back further to where we had this correction months ago when the carry trade unwind of 2024. This was very impulsive. Since that impulsive decline, we had all this overlapping, chopping price action, which this could still potentially be an A, B, C expanded flat correction, which if that plays out, we got to come back down toward that 185 to 180 zone. That is thousands of pips from that. And if we tie that in with the market financial crisis at the same thing, this thing could turn into not only thousands of pips decline in the 3,000 plus range to come down here, but could open the door to that 11,000 pip range if it's the next financial crisis. And why are we thinking this is extremely overbought? Because I said so. Is that not enough? You go to the software and we are overbought across the board. I believe I have one in here. I open up so many of these. So we have a daily that's grinding right back into overbought. We have a weekly, and I'll move this out of your way so you can see that's the price magnifier right there. That's the daily chart. That's the weekly chart. We're back in overbought territory. And even the monthly chart, it's an overbought territory. So could it go higher? Yeah, like I said, we break that level, we go up a couple hundred more points, but we're still looking at this prior high down to a lower high. Look at it on the charting platform. Go out to the monthly. Does this thing look like we're about to go breaking out to all-time high? Well, we've been getting lower highs for decades and decades. So yes, I was looking for that correction, And are we getting to the tops of it? Maybe we're already topped out. Maybe we go just a little bit more, but it's going to make a lower high over here. And then the next financial crisis, we're going to go a massive amount lower. Every financial crisis does it. The next one is looming. And look at what this pair's done over its history. Looks like and I know a lot of people love to harness the power of the pound yen. I'm one of them. I've tamed the beast. I love the volatility. No, you can't trade with tight stop losses. This thing sneezes 100 pips. It can inhale, exhale 150 pips. You get any type of reason for it to move, it can move 1,000 pips or more in a day. I've seen it during these crash. You see this thing move 1,000 pips in a day. Got it? All righty. So what are we looking for? Are we going to go a little higher? We're looking for another push lower. So this correction, it did what we said from COVID low over here. We went breaking that high. That was spot on. Now I'm telling you, monthly, weekly, daily, everybody's overbought. We need another correction down, even if it's a smaller correction or the larger correction, or it turns into the next financial crisis. It's not going to be a small correction. It's going to be a massive correction. All right. All right. Let's move on to the markets. What about ES? Well, deal or no deal, we had a big pop. We went right to, and based on this look, we're probably, if all clear holds, we're going to go up here to 76.90, 77.40 area, basically 77, 77.50. But be careful. We do have a slight higher high. That could still be, well, a couple of things this is no longer. Last week and the week before, I warned you about these pullbacks that were imminent, and we got it. Went right to our support zone, and I said it could potentially bounce, probably make a lower high, lower low, but it could be potential of a 1-2 nesting. That was your first wave down, second wave correction, and then we get a big push down. If it was that nested scenario, then it would certainly lead to big time more downside. We got the bounce, even kind of set it in our class archive, that expect the markets to continue. I hadn't updated that one. 1 second. Last week's price action. After market sell-off, expect to see a bounce. Well, we got the deal, supposedly handshake and what is it, electronic deal sign that the markets seem to like, but be careful today. I don't expect the markets to do a whole lot today. Why? Tomorrow. Tomorrow is a big day. Tomorrow is FOMC, the new Fed chairman. Unlike Powell, Warsh doesn't want to give heads up to what he's planning on doing. Powell liked to let the markets know what he was thinking ahead of time, so they weren't really caught off guard. Warsh doesn't believe in letting the markets know. He should do what he's got to do. So is it possible we could have a massive sell-off tomorrow because instead of cutting interest rates, he actually raises rate? Possible, right? So I don't expect the markets to do a whole lot today. They typically go in this wait and see kind of mode, especially knowing the new Fed chairman is not one to show his hand before he does something. This could set up a lot of volatility tomorrow. Remember years ago before Powell, those FOMC meetings had a lot of volatility spikes and whipsaw and all kind of things because they didn't know what to expect and tried to decipher what he said. Then Powell came on board and kind of loved his moment in the sun. Always had his conferences and his press conference right after and blah, 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 jawbone city. Well, this is different now. Do we raise rates? If that's obviously that would be a surprise to raise rates, then the market should sell off pretty nicely. Higher interest rates is not conducive to those tech giants. They like low interest rate environment. I digress, but I think you get the point. So are we going to leave rates alone? CPI printed a little hotter with oil prices up, but oil prices are coming back down. Is that enough to leave rates alone? Or do we raise rates? Well, there's a tool we use when we talk about the Fed. Are they going to raise or lower rates? And that is this. DGS2 is the 2-year maturity rate. And then this orange line or gold line is the Fed rate. Or between 375 and 350, you kind of split the difference, 363. This 2-year maturity rate's been climbing. So, Mr. Tucson, what's the likelihood he cuts rates? Now, that would really shock the market. Based on this graph, the Fed rate is already well below the maturity rate. So, the idea they cut a quarter point, that would put it where we dip to down in this zone. And I don't see him doing that. But if we raise a quarter point, we go from 3.6. Now the quarter point would put us a little above 3.8, 3.9 range. And we have some wiggle room there. So that would just raise this line up to here. And that, let me go ahead and put one there. I guess I'm going to use this guy. That would put him somewhere around in that area if we raise a quarter point. Right? From 0.6 to 0.3 it'd be like 3.88. Got it? 2.5 added to that, 3.88, still below the current maturity rate. So why I'm warning you about this is because he has room to do that. And he's already shown his hand to say he's not going to show his hand. Right? So he's going to catch the market off guard because they don't have any inkling of what he's thinking or what he's going to do. And some would say, well, he's going to be, Trump's clone. He's going to cut rates because Trump wants it closed. I don't see it. You cut rates, that puts this line down here, and look at, we're a point above in the neighborhood of a point higher than the Fed rate. That's not good. What happens when that happens? Right? You go back in history. Let me give you the bigger picture. Why do we even look at this graph? You think the Fed is the one that makes the decision? Well, they just lick their finger, stick it in the air, and go, we're going to cut rates this cycle. No, we're going to raise rates. No, we're going to leave them alone. They follow this. When the maturity rate plummets, the Fed cuts rates. When the maturity rate rips, the Fed raises rates. Cuts rates, raise rates, cut rates, and going into the financial crisis, dot-com bubble burst. Maturity rates started falling off a cliff. So what did the Fed have to do? Cut rates, cut rates, cut rates, cut rates to follow. Then as we recovered and this maturity rate started to recover and started ripping higher, what did the Fed do? Raise rates, raise rates, raise rates. So this is what leads the Fed's decision. When it drops, they cut rates. When it rises, they raise rates. What is it currently doing? Rising. I still said, well, I'm not sure they're going to raise rates because it's a little high, but if we go breaking above that little swing point right there, and the Fed rate's down here, and we're pushing upwards of a point above the current Fed rate, I think that's going to force them to have to raise rates, because what happens? This thing gets out of control, then we go ripping and have another leg of inflationary pressure coming. So you have to raise rates to curtail inflation. And with oil prices, that pushed our CPI most recent, I think higher than the last 3 years, because oil prices spiked real high. Well, we got a deal coming, oil prices is dropping, but maybe that's enough to say that, well, we're going to leave rates alone because oil prices are dropping and we know that's what made the CPI spike. So let's see what happens. But this is why I'm warning you, because there is room, Mr. Tucson, there's room for him to raise rates. Certainly no room for him to cut rates right now. So what if he does shock the world and raises rate? I see our market selling off, obviously, because he raises rates and it's a shock. They're expecting, hopefully, they're still wanting to see the rate cuts. But big tech should start the process of a big sell-off if he hikes rates because of CPI. He could easily say it. Well, CPI has been on an uptrend. Oil prices are elevated. The prices are still elevated. So we need to be aggressive to prevent further inflation to come. So they can certainly do it, and they got room to do it. To the downside, there is no room to cut rates. We're already well above the Fed rate now. By cutting and lowering that even more, you're pushing toward that what? Full point. Well, they get very uncomfortable when the maturity rate's like a point higher than their Fed rate. They get very nervous and they start to react. I digress with this, but it's shown you in the history of market crashes, when the rallies occur, et cetera, et cetera. What does the Fed do? Maturity rate races off, they raise. Maturity rate starts falling, they cut rates. Maturity rate starts falling, they cut rates, right? So it's pretty obvious. So what if, with this rally, he raises rates? He certainly got room to do it. Might not be what people are expecting or hoping or wanting, but it's what may be necessary if this blue line continues to run off. No question they're going to keep raising rates. And we're right in that zone where we have enough room to raise a quarter point. Maybe we raise a quarter point, gas prices come plummeting down, inflation starts plummeting lower, and then we cut rates the next cycle. So there's no rule to say he can't raise rates one cycle and the next rate cycle cut. That's certainly possible. I'm just throwing that out because he's one not to show his hand, and likelihood probably because of oil prices and the deal. I mean, anything can go between now and tomorrow, as you well know. But if the deal continues and is expected to sign and oil prices continue to drop, then that would be reason he may say, yes, it's elevated, but with CPI should be coming back down as oil prices are coming back down into reality with this deal signed, blah, blah, blah. And we could see this thing stay the same or raise rates. I don't see cut. I do not see a cut. Maybe he does because shock the world thinking, well, the gas prices are coming down, CPI is going to come down. I'm going to go ahead and cut, but I don't see it because we're already, that cut would put us about a point lower than the current 2-year maturity rate. So in my humble opinion, very unlikely we cut rates tomorrow. But then leaves us leave it alone or raise rates. And because we have enough room, raise rates, in my humble opinion, is not off the table. It is absolutely not off the table. Be careful. A lot of volatility. So what does that got to do with ES and all? I don't see us doing very much until we wait and see kind of mode. If he does shock by raising rates, which he does have room to do so, then I could see a nice sell-off coming. And as I was getting into the conversation about last week, if we bog down in here, this could be the beginning of a 1-2. We get a 3, 4, 5, and we come way down, pushing the fall in the fall. Well, we got the potential. Oh, it looks like we got a deal, and the market's like that. Yeah, we like that. And we popped up. One thing, this is no longer, Harold, there's no way this can be a 1 down, 2 up, because 2 can never go higher than the 1 where we started. But it does not, hint, 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 alleviate the fact that this can still be an A. That's a B, expanded flat because we broke a new high right there. And we still come back down in a C. Remember, A typically equals C. Get my chart going. A equals C, or A times 1.272 equals C. Right? Well, let's just give you some numbers. What does that look like if we were to do that? Meaning let me take these off so you can focus on what we're talking about. We'll take all that off for right now. So from this high to this low, we got that lower high, higher high slightly, but you use your 3.2, right? 3.2, the trend base Fibbo extension, and we go from the high down to the low up to this current higher high, we're talking about if this is the A, B, and we go C, then we're likely at least going to go to 72. And if it is the 1.272 equals C, then we're talking about 7,100 zone. Not bad. That's a pretty good correction over 500 points coming back down in a simple A, B, C. That's why I'm warning you. Now, what if he decides to raise rates? Kerplunky. No doubt. He shocks and raises a quarter point. These markets are going to sell off. Now, I'm not trying to tell you, well, Harry, at 2 o'clock, he shocks the world at 2:30 or 2 o'clock. He raises a quarter point. And by the close of the day, which is a short minute from there, when the markets close, well, this market doesn't close then, but the index market closes, that I expect this is going to plummet 500 points in an hour. No, but it's going to be a pretty good sell-off should he raise rates. Leaving rates alone, this thing did break above, so this is the potential downside. So you got to put a little bubble down in here, which that was the former bubble. I'll tell you what, instead of putting another bubble, I'm just going to move where we reached our target we were looking for that initial bounce and recovery after the sell-off we warned you about. I was looking for more like a 618-786 retracement, a failure, lower low, and that could have been a big nested 1-2 going down in 3, which would bring us way down. We don't have that now because this can't be a 1-2, but it could still be an ABC we just covered. So this is the target zone. So let's move this guy over here, right in that zone. So if we get any surprise like a market hike, expect the markets to sell off. And if we do get that, I think we're going to push more toward the 7,100 than the 72. And then who's in the neighborhood? Magic Fibbo. So likely we can get a daily Magic Fibbo visit. Should we raise rates? But regardless of what he does, maybe he leaves them alone, this still could be an ABC. How do I know when this target becomes viable again, like we talked over here, that target being viable? What was it? That retracement. Right into that zone off of that latest move, retracement zone. Or if you even use that low to that high, that's extensions down here. So this is why we had confluence of events. This is where we were likely headed, and we reached it. Then we were oversold, and we expected the bounce. Well, the deal pushed us to a new high, so that does alleviate some of the major downside, where this was potentially a 1-2, 3, 4, 5. We could have been pushing way down into the 6,000s and lower. But that is alleviated now. We made a new high. So far, so good. So should we raise rates and shock the world? We're going likely that ABC. It doesn't alleviate the downside to this area. It alleviates the downside to the much further area at this juncture. Fair enough? So 2-point tool, high to low. We're above the 618 with that deal thing. Ooh, we got a deal. So the probability we go to 77, 77.50 looks good. But be careful. Because tomorrow, I don't see us ripping that high another 100, 150 points necessarily today. I mean, anything's possible. But with the Fed rate tomorrow, I think it's going to be all eyes kind of coasting. This will probably kind of coast, maybe drift a little sideways to lower. Really don't see this thing ripping right now because of tomorrow. But if tomorrow brings a surprise, this thing could go tumbling down, and this would be your target zone. If not, all clear, 77, 77.50. Okay? What about the NASDAQ? Kind of the same thing. It's ditto. It looked like a nested 1-2. And even as we drilled down early in last week's classes, we looked like potential 1-2, 1-2s setting up on the lower time frame. Well, after the push lower, which we got, remember the other day we had that low? I said, that's not the low yet. We got to go lower low again. Now this was expect a bounce. Then we got a potential deal, which pushed this. So this is no longer a 1-2. Why, Harold? Same reason. We broke new highs. So you can't have a 1 and a wave 2 that goes above where wave 1 starts. But this can definitely be what? An A. My little marks a lot writer, A. This could be the expanded flat B. And we still get our move lower in C. And this was the original target we dipped down to. Now we bounce. Well, this target could still come into play. So what does that look like? I'm going to put a fresh one on here for you because we're looking at that high to this low to this new lower high, 3-point tool. See how this is going to overlap in that area. Got that high, got that low, got this lower high. And look where that 1272 overlaps right in that same target. We dipped to right at the fringe of it. We bounced. Woohoo! We're going to what? 40,000. Just keep buying, people. Keep buying. And when the Fed potentially shocks and raises rates, keep buying and you're going to end up down here first. Got it? So this is cautionary tales right now. If you're part of that run up, take your profits. Down 300. I don't expect this to do anything but probably go lower low, especially if he raises rates tomorrow. No doubt we're going lower low. And who's in the neighborhood again if we reach this extension? Our magic Fibbo. So could this turn into a little a new all-time high and then another push lower? You betcha. Be careful. What if all clear, leave rates alone, get some kind of talk from Warsh, and he says, yeah, all looks good. The CPI is coming down. I see in the future we're cutting rates because the reason we got the spike in inflationary pressure, CPI, et cetera, is because of gas prices and oil deal in Iran. And we got the Strait of Hormuz opening, and we have all the reasons why we're expecting this to come tumbling down. So I definitely see rate cuts in the future. Then where's this baby going to go? That high, that low. We're going to be targeting 31.3, 31.6, up to 32.5. So what's it going to be, ladies and gentlemen? Do we get the all clear and a little jawbone tomorrow afternoon stating, hey, yep, inflationary pressure is going to start to subside. We're going to start cutting rates. And he usually doesn't show his hands, so I don't see him saying, we're definitely going to cut rates next cycle. But he might be more generic that rate cuts are not out of the picture as oil prices come back down, inflationary pressure comes back down. But this is likely going to chop sideways, probably a little bit lower while we're wait and see. But if we do get the all clear, and he does mention something like, yeah, inflationary pressure is going to be subsiding, and we certainly have the door open for rate cuts in the future meetings, then I think the market will rally off of that towards your 31.3 to 31.6 zone. Fair enough? So it's about 1,000 points, 800 to 1,000 points or so. If not, and we do a rate hike tomorrow, no question, we're coming down. Down goes Frazier, as Howard Cosell said. Down goes Frazier. Down goes Frazier. Well, down goes the NASDAQ if he raises rates tomorrow. Boom. And he could even jawbone to say that based on inflationary pressure. I don't know. I've never seen the guy present at his first meeting, so nobody knows. But if he jawbones about, well, inflationary pressure is still this, it's still that, oil prices have not subsided to the level we need, inflationary pressure, we're really not looking to cut rates anytime soon. Bingo. We're coming down anyway. So we don't need necessarily a rate hike to get here. This could simply be an A, B, C. We still get here with simply saying we're leaving rates alone today, but rate cuts are really not in our focus right now, which means rate hikes could be. I think the markets will sell off even on that. All right, everybody good. So there you have it. That high, that low, that lower high. You got your target zone. If all clear, and he's talking about based on CPI and oil prices coming down, we certainly have rate cuts in our future. This thing's going to go ripping up to this area. And then today we should just kind of chop in the zone. So if I'm short the NASDAQ and I'm up 300 points, what am I doing right this second? Taking some profits. But Gary, we could drop down another 1,000 points. Yeah, more. This is down a 27 zone. We're talking 3,000 point drop. But why would I take profits? Because it could easily go ripping up, from where we are, 1,000 points or so up. So that's why today, movement like that, I'd be aggressively taking some profits, be in a position of authority, because I really don't see this thing plummeting down because of the meeting tomorrow. And I really don't see this thing ripping higher because of the meeting tomorrow. And knowing we got a new Fed chairman, the whole story fits, that we're probably just going to chop in this zone. Well, why would we expect a little bit of a pullback? We're kind of overbought. I mean, even after that pullback and this recent rally, we're kind of getting back in overbought territory. So let me see if I can pull that up and go over here to the NASDAQ. NASDAQ, right there. Weekly's overbought. That was part of that little dip last week. And we're still kind of thinking about turning over. The daily ended up slingshotting higher based on that. Well, looky. Is it possible that we could go from what we call do the arrows. We can go from the slingshot up to a slingshot down, and we go back to the low and make a new low into the cloud as this baby starts to finish that cycle down. You betcha. Weekly's overbought. Daily's turning up. Could this easily turn in reverse? Simple. He raises rates tomorrow. This thing is going to turn down over the next several days, and we're going to go lower low. We're going to hit those targets we talked about. Or he says, we're leaving rates the same, but I don't see any rate cuts in the foreseeable future. Something of a negative aspect about rate cuts. This thing is likely still going to do that ABC correction and bring us back down to the zone. That was one hell of a run. And even that's why I warned you about the correction. And it was pretty good, strong sell-off. And then we got this bounce we expected, but I didn't expect to see that big a bounce because of deal on the table. And what can happen? He could do what he does, and then the deal falls apart, and we still sell off. We got this big bounce because of the potential deal. And we know about the deal, no deal, deal, no deal, deal, no deal. Those people are insane. So I digress, but be careful. Be sure you're taking profits on the down move. And yes, there's a lot more on the table should we get one or two things. Raises rates tomorrow, boom, we're going down. Or he leaves rates alone, and we actually have him talk a little bearish on future rate cuts. That should bring us down. Last scenario, rates alone, doesn't really tip his hat either way. All clear, we go up to the extension, and that extension was on the NASDAQ, this 31.3/31.6. On ES, those extensions were 77/77.50. On the way down, we're talking 72.71. Got it? In the interim, be aggressively taking profits on this because I really don't see this thing popping up here or breaking down here because of tomorrow's meeting. They're going to wait and see. So a lot of chopping here until then. Okay. All right. Russell. Russell's trying to break out. It too is getting a little toward its extension zone we talked about most recently. That recent high, this recent low. We did reach those extensions. So typically after you reach extensions, what do you get? A little bit of a pullback. Yes, I think this Russell is headed to 3,100 up here. That's the target zone at 3,100. But that doesn't mean we can't have a correction in here first. And what if this is the same type of mode where, and what do you mean by correction? Notice each time we had a low, I'm going to just draw so many lines on here, you'll see nothing but a line. That's a 3.2, my 2.2. That low, that high, what do? We reached the extensions and we had a pullback, right? That low, that high, kind of doing the same. Every time we get a pullback, we reach the extensions and then we pull back. That low, that high, we reach the extensions, we had a pullback. That high, that low, we got to reach the extensions and we're probably due for a pullback. And yes, these pullbacks been making higher lows. So I would not expect this thing to necessarily come way down here, but the plan is to go up. We're getting awfully close to our original bubble up here. We talked about months and months and months ago, and we're tapping the lower end of it. Recent extension, so not be surprised to get a correction. If the markets do what we think, he talks about or shocks tomorrow with a rate hike. This is coming lower. He talks about, well, rates are the same, and with CPI being neutralized because the oil price is coming back down, I see rate cuts in the future. We're going higher, or we get the bigger pullback. One of the two, based on what he says. So be careful. Take aggressive profits. Would not be shocked to see a bit of a pullback because that's been its MO. High, low, you reach the extension, you get a pullback. That wasn't quite as deep. That was more of a retest of the prior breakout on that one. Reached the extension, got a pullback test before we went higher. But as of late, we get it. We pull back, we hit the extension, we pull back, we hit the extension, we pull back. So this stair stepping should continue toward that 3,100. And if we do get a bigger retracement due to jawboning, a shock by a rate hike, etc., then this would be a great buying opportunity because the target is still 3,100. Most people don't trade Russell, they trade IWM. Same scenario. Yes, I think we're going to 300, 315 zone, but we may need another. We broke the trend line we were looking for. We did go to a higher high. We reached the extensions on the smaller scale. It's a 3.2 here. But how we reached those extensions, let me stretch this out a little bit. We reached the extension, that high, this low, we reached the extensions. Can't make this stuff up, ladies and gentlemen. And what happens after you reach extensions? We have a pullback, high, low, reach extension, had a pullback. I mean, high, low, reach extension, had a pullback. It's just kind of what the markets do. So, am I expecting a massive sell-off on this today? Not necessarily, because I think it's going to be somewhat muted because of the meeting tomorrow. But what if we get all clear? 300, 305, or 300, 303, followed by my 314 up there. If we don't, and he's talking rate cut, rate hike, and he hikes it tomorrow, I think that'll pull back down. And could this still be an expanded flat? It's still in the zone of a potential AB, right? We didn't go up to the 1618 like a 1-2 going in 3. It's still in the zone of a potential ABC. And that would mean we come back to the low and make a lower low over here. And that would open the door to that target zone / magic fibbo. We come down there. What's it going to be, my friends? Do we go higher high, or do we get another correction and go even lower low? Either way, be aggressively taking your profits. Global liquidity, which is what I use as the proxy, is the Nikkei. Reached extensions yet again. Low high, reached extension, likely going to get a correction. Could this thing get all clear? What if we get all clear and the man cuts rates tomorrow? Boom. Spikes. Increased liquidity means our markets could fly higher. Decreased liquidity, our markets get a squeeze and go lower. This could certainly be just like all the others. S&P made a new high. Dow made a new high. All of them made their new high. We can even check out the Dow real quick. Dow's kind of ignoring the scenario. Well, the reason it hadn't made a all-time, it hadn't hit its extension yet from the prior move. So I would not be surprised to see this push toward 52.2. Maybe we get there today. We're up right now, 400 points. We could go another 200 points, kind of tip this, but be careful because, again, tomorrow's the day, and even the Dow could go plummeting if he talks about hiking rates tomorrow, or does. I think it's going to pull back. And even if he doesn't and say rate cuts are off the table, still see a pullback. But in the interim, this looks like it wants to go toward that 52.2. We're in the neighborhood. I'd definitely be taking some profit, but yes, we probably can go a little bit higher. Any questions on that? So what could this bring it? We can bring us way down in here. We can get a 618 retracement off of this new high. That's the wrong one. I'm going to take that out. But this low to that high, I got too many of these in here. Is that my high? Yeah, that's my high. So we got a new high in here. Still got the 618 in the same zone. I'm going to fix that a little bit with that new higher high. But this is the 618-786 zone. This would initially act as support now that we broke above it. So I'm going to put that green. So could we get a retracement back to Magic Fibbo, 618-786 zone? Sure. That's been a hell of a run. We're due for a bigger correction. We got a little taste of it here, but that could still be, it's no longer a 1-2. It could be the AB, come down in C. And remember what those look like with the 3-point tool? That high, this low, this higher low, it's a new high, but that level, that puts us in the neighborhood of down here at 62 area. We break that low, it opens the door to 60. And who's starting to shift into that zone? Magic Fibbo. So if we do get this pullback and don't hold support, we go toward these extensions down here. That doesn't hold. Then it looks like we're going to make a 618 type of retracement out of this toward that 57 area, which from right now, that's 12,000 point drop. Wow. That could be very quick as well. Doesn't take long for this thing to pull back. That's global liquidity's picture. Do we get the fall in the fall we've been talking about? That's certainly not off the table. That was not the fall in the fall I was looking for. And yes, I looked for a correction, but I was expecting further. So this still could get us further corrections in toward the fall. So be careful. All right. All righty. So we talked about a couple of those Korean markets, KOSPI. If you're into this, please be careful that this thing has been insane, to say the least. This thing went down from 2,000 up to 9,000. That is a psychology of a market cycle ready to just plummet. What can happen when they get the margin calls on this? Where does that come from? For those of you that may have joined us late, or you just selectively listening in the archive on this, that South Korea has about 52 million people. And of those 52 million people, I kind of should have done it this way, should have done it this way. So how many brokerage accounts you think those 52 million people have? It's like 2 to 1. So there's 102 million plus brokerage accounts of the 52 million people, and they're all buying the same stock: Samsung, SK Hynix, TSM, et cetera, et cetera. And they're buying the same thing, and all that's on a lot of leverage. So what if we get, and the banks are already preventing any future leveraged type trades, stopping them now. Goldman Sachs told their people, if you have Samsung and TSM, SK Hynix, et cetera, you need to protect those gains. And the way to do it is do a zero cost put spread collar. How does that work? You buy a call option and sell a call option out maybe 100, 140%, because this thing could still rip some more. And then it would cap your top side, but you can take the money you get from selling that call option and then buy a put spread down below to protect if we do get the margin call and this thing goes plummeting. It protects your back end to lock in your profits for free. And if it does continue to rip, which it's possible, it doesn't crumble yet, then it does cap your upside, but still it's giving you a lot more upside. And look at that move. That is the perfect look of a psychology of a market cycle bubble that's going to come down. Why am I bringing your attention? Well, if you're into these markets, take your profits, lock them in. Least you should do, sell that out of the money call option, bring in the premium to then reverse it and buy a put spread, use that money to buy your put spread. They call that a zero cost put spread collar. You put a collar around your gain so that if the worst thing happens, you don't lose your shirt. You lock in those gains. And then when your stock price goes down, your puts gather all that money. And then after the correction, you can use that to continue with your stock. Everybody good? I'm speaking a foreign language. Join the service and we'll explain it to you. But anyway, this has been a hell of a run. We're due for a correction. What if, William Bruce, we just get like a 618 retracement off of that? Well, that would put us down about halfway, more than half from the top. But, 618 retracement in the 5,000s would put us about 50% retracement off of that low. And it's not exact because I didn't take the time to do it. But in this neighborhood, we could get back to 5,000. That's a hell of a drop, even into the potential 4,000 or even 3,000. We could get a weekly magic Fibbo visit out of that. How would that happen? We start getting margin calls. All those 102 plus million accounts that are leveraging, buying their stocks, et cetera, on leverage. And then they get their margin call. And what happens when a margin call goes through? Either you pay the money or they liquidate your stocks to pay for that. And by liquidating stocks, it starts to free fall. And then the further the stock falls, the more margin calls, and it's a vicious cycle. And this thing can end up plummeting very quickly. The good news is, if you haven't participated in this market frenzy, then you're going to have an opportunity once that does come to pass to buy some discounted rates, because these chip makers and all are top quality, the best chip makers. So I do think they're going to recover, certainly, but just be careful. This is psychology of market cycle. And once you get that kind of plummet back down, what can we do? We can actually come back to where we broke out from. I mean, it could be gnarly and very ugly. And if it gets that ugly, I know what I'm doing. I'm buying down here, looking for the next run. What if you were doing the worst of the best and the worst of both would be the KORU, 3x leverage on South Korea. Whoa, look at this insane move. It went from $25 in April of 25 up to 1200 plus. Whoa, Emil, look at that. You talk about a bubble waiting to happen. Whoa, what? Just like the last time. You had a low, you had a high. It did what? A 618 retracement. You can't make this stuff up. Actually a little bit higher, but it's right at that 618 retracement. Then it went for the next leg. This is why these levels are critical. Well, what if we just get that this time and we come back down and do a 618, 786 retracement? That puts us from 900 back in the 5 to 300 range. Whoa, that's a nice slap in the face. Remember what 3x leverage does. If the underlying goes up 50%, this thing does 3 times that, would move 150%. But if it goes down 50%, what's 150% from that? You're in negative numbers. This thing could go out of business. So please lock in those profits. This thing has been insane if you're still in it. What if you want to risk it and stay because you think there's another leg coming? Maybe. Then the option play on this may not be as good as the bigger ones, but looking at that, you might want to consider it. Is there possible to sell a call option out here, bring in enough premium to then put a put collar on this thing to the downside to protect your back end? Just be careful. All I can say is we do get the massive decline because of those margin calls, the big drop, 20, 30, 40%, 50%. We'll see what it ends up being. But if it comes back down to reality, then it's a good buying opportunity for the next run as the markets recover from that and then continuation. Fair enough? And of course, there is EW, whoops, that's X, EWY, which is the iShares portion, ETF. And it's not quite 3X, but it went from in the 40s up to 2 plus. That's been a hell of a run as well. So be careful. The margin calls are out there and this thing could drop very quickly. What are we talking about on this one? That low up to that high, 112, cut it in half or more. Be careful. If you're in it, take your profits, protect it. And on some that trade a lot of options, you can do the call option out here, sell it, take the premium, buy the put spread down low to protect you back in, so that if worst case scenario, you got your shares, you're protecting. And then we get this big deal over here, zero cost, because we used the money we bought from selling a call up here and buying a put spread down here to protect it. So if it happens, then as the stock price goes lower, you get it in your put spread. And then once it recovers, you still have your stock in which to continue the party. Or you just take profits now, wait for it to come low and correction, then look for maybe reinvesting. But I would not be surprised to see a very substantial retracement and wiping out a lot of these gains coming sooner than later, but no later than later. All right. All righty. What else? What about the black gold Texas tea? We're breaking down, finally, Mr. Tucson. We kind of said the technical picture, the higher level would be to go lower. We talked about the wedge. You got the top of the mouth on May 9th, I keep saying May, March 9th. We got the bottom of the mouth on March 10th. In 2 days, we had this ridiculous, huge level from 77 up to 120, basically, 119 and change. That's a massive mouth. And we said as this was wedging down, we're going to break one way or the other, And if we got a deal, well, we're going to do what? Break down. No deal, we're going to break up. This doesn't mean this is off the table up here, but if this thing holds, I suspect we're going to go low, and we could even get lower low, start heading into 40s. This thing could even come even lower into the 20s. Don't think we're going to 16, but we could certainly hit the 40, 30 range, maybe even go into the lower 30s and upper 20s. Any questions? So is this a deal? All we got to do is get no deal, right? Between now and the day they physically in person signing it, it could go to no deal, and this thing could whipsaw and skyrocket. So if you're shorting this, expecting more downside, I believe we're going to get more of it. We should go back into the 60-50 range. We're finally breaking the mouth low. We've been in that range for a month. I mean, March, April, May, June, couple of months-ish. And now the likelihood of the technical picture getting lower highs, higher lows, but based on that low, that high, we finally closed below the 618 of that move, and we're looking for lower low. The bigger move, we're right in that support zone. So this is why you need to take some profits. Yes, I do think it'll go lower, but if there is no deal and it falls apart, this baby's going to rip higher. So be aggressive, be nimble, and be careful. But this kind of played out like we expected. The mouth would go one way or the other, Harold. Yes, if the deal holds, we're going to do it this way. If the deal falls apart, we'll probably pop and do it that way. But the plan is, this is what Warsh can look at and say, well, CPI has been elevated and the concern of inflation, I know it's real. We're not saying it's transitory. We don't believe in Janet Yellen. It's transitory inflation. It's transitory. It's transitory. Don't get me started on that one. But this is not transitory. I don't believe in that. It is or it isn't. And this is likely transitory in a sense because it was inflationary pressure due to these spikes in oil. But if they come way back down, then it's going to alleviate a lot of price action and inflationary pressure, and it could warrant even a rate cut. We shall see. We shall see, my friends. I digress, but be careful on this. Yes, the deal is to go lower low unless there's no deal. If there's no deal or it falls apart, it's going to go spiking. So be in a nimble position, in a position of authority. And yes, I do think it's going lower. We get to close below that low. It sets the tone. We're going where? Well, you can use that low up to that high. That's a 3-point. Stop that. 2-point. So you can use the mouth low up to the high, and you see where your extensions are. 72, 67, basically, 66.92. There are the extensions waiting for us to go visit. Still think that's the probability. And if it continues, the deal is signed and it's official. The next level is this lower trending high trend line, which puts us about 60 toward the mouth area that we were talking about. Everybody feeling me? So we reach these extensions. I would take more profits at that 72, take some more profits around 67. We continue lower. Next stop would be about 60, upper 50s, low 60 area. And we break that, then we're likely coming down to the 40s. Okay? But at any moment, that's why when you get a gain like that, 6% move, if you're trading futures and 6% move, that's a lot of ticks to be in a position of authority, because if there is no deal for whatever reason, this thing is going to rip in the opposite direction, and it'll be rip your face off if that happens. But the plan is deal, we continue to go lower, and the next targets again are 72, 67, followed by about 60. All righty. All right. What about gold? Be careful on gold. The bounce was inevitable. We talked about that. Harold, how about that? As long as we're below 5,000, we must get a lower low. Now that we got the lower low, this still looks like we go one more time. So be careful on the rally. Remember what I said when we talk about gold below the making a new low, that's a nibble zone to go long. But the ideal buy zone would be our 39 to 3,700 zone. Anything lower than that is get on your knees and thank the good Lord above. But this doesn't mean it is a lower low. So that's all we theoretically needed to where we start breaking out. But as long as price was below 5,000, I said we needed a lower low. As long as price stays below 45, lower low, still very high probability. If we break 45 and then push above 5,000, then in my humble opinion, the downside is over and we're going to start breaking out to our next target to the upside. That's 7 to 10,000 target. So be careful on this rally. What if I bought down here and I'm feeling good? Hold them. Just hold it. Bought a bar of gold at Costco? Hold it. Even if it plummets down to 39, 37, what do? Buy some more. What if it bounces again and makes yet another lower low? Keep buying. The more it goes down, the more you keep dollar cost averaging, because this thing is going to go ripping up to 7 to 10,000. Got it? So this bounce was absolutely expected. That's why I drew these lines. Absolutely expected. Could we go a little bit more and test the magic fibbo? Yeah. Why is that 45 important? The initial move down. That's that wait. That's a terrible. Let me do that again. See if I can get my line straight here. But that initial move down was 1. That's what I was calling our wave 1. Right? This correction was wave 2. The big push down to where we kind of thought we would go in the neighborhood was wave 3. And then a 4. And I drew this out weeks ago. And then the 5. So are we going to get it? This still looks much better with another lower low. That picture would look pristine with another lower low. And I like the idea I could buy gold somewhere in that 39 to 3,700 zone. I like it. But if you bought it here, which was part of the equation, that we make a lower low, that may be all we get. That's fine. Even if we do get the lower low, don't panic. Just dollar cost average and buy more. Amen? So is this going to play out? The technical picture would be a lot prettier. We get that last thrust lower. Why is it the 45 range? Because that's where that initial move down came to. 1, 2, 3, 4, 5. Got it? So 4 should not go above wave 1 low in this case. So that's 45. What if we break 45? We get above 5,000, which is up here. It's over. So my first resistance to turn down to is anywhere from now up to the magic fibbo, where that 45 is being protected. So any rally into the fibbo and failure is ideal. Or we just start turning over now. We get above 4,500, starts to muddy the waters on this. It still could be corrective. You know, this was part of the correction, and this is overlapping, and we still get another corrective move, and still could get another push a little bit lower, but it does muddy the waters. If we continue this and break above 5, then it's saying that's probably the low in place, and we're off to the moon, 7 to 10,000 over the next few years. Could get there sooner, could take longer, but I don't expect to go from 5,000 to 7/10,000 in a matter of months. I think it'll take longer. Fair enough? Any questions? So be careful. If you're a scalper and you're not buying gold and holding it or doing it for long-term possession, I'd be taking some profits because, again, this looks better with one more flush. What if I bought here and I'm doing the longer play and we get a lower low, we add to the position. And we bounce here and get another lower low, man, get on your knees and thank the good Lord above if we get anywhere near that weekly magic Fibbo. We get anywhere near the mid 3000s. Back it up. Because that is like a triple waiting to happen, double minimum to get to 7. We get to mid 3s, and triple, if it not, we're going to be up here around that 10,000. It's a beautiful thing. Any questions? So gold did what we needed it to do, minimum. Could it break out from here? Yes. Is it more likely to break out right now than to go lower low? No. As long as we're below 4,500, we still have a much better, not only technically speaking, but a much better probability. We still got to go lower low. Finish that move down, then we can talk about this. All roads, whether that's it already, or we do get the flush, or we get even another flush after that, and we come down at magic Fibbo. I don't see gold going any lower than the 3, that weekly magic Fibbo. But if we get down there, salivate, my friends, because that sets up the massive move in the months and years to come into that target. So all roads lead to this. And the probability is still we need one more flush. But I would be remiss if I didn't say it is possible, just not a high probability that that is the low that we're going to see. Possible, not probable. When does it start becoming probable and a lot more than possible? We got to get above 45, and we get above 5. Then I feel very comfortable. We're above 5. That's it, folks. The bleep, bleep, bleep. That's all, folks. That's it. Otherwise, look for this to fizzle, get another push. Then, so if you bought already, congratulations. That's a good move. And if we get another push lower, don't panic. Don't think about it. Just either take profits and wait and rebuy, or I like to cost average. This is a longer term trade that's going to take a few years, in my humble opinion. But we're going to end up at 7 to 10. So whether I bought it at 4, or it does dip to 39.37, buy some more, or it even dips down to that weekly magic Fibbo into the mid 3s, I'm going to get on my knees and say thank you, add even more as we expect this to go to 7 to 10. Silver. Could silver have bottomed? It didn't quite get the lower low. Let me double check. That low went down to 61.21. And this low went down to 61.59. So we do not have a lower low. I'd like to see a lower low still. We're rallying into the magic Fibbo. We use the recent swing point high down to the recent swing point low. And we still got to get above 79.84 zone. So I'll put this on the chart for resistance. This is my big resistance zone up here. Change that to pink. Not that one. This one. Pink. So this is resistance. Not to say we have to go up here, but this would be the level. We start breaking above that, then we're likely going up. But I'm not convinced that I still wanted a lower low. We didn't get it. We do have a higher low, and sometimes that's the way price action finally finishes. You end up with a higher low, and it starts breaking out. But what are those make or break levels like I gave you on gold? That's this on silver. We should not go above 84. If we get above 84, then we're likely going to start breaking out to another high, which puts us not to the recent high up here, but it kind of goes toward the extension, 94, 97. Got it? Is it possible this could be just a complicated correction? We get up here and we still go lower low? Yeah. We got to get above this zone up here to set the tone. We're going higher high. But the plan is for silver to go to 150 to 200. 150 to 200. So I go out to a monthly. There's the target. What's the likelihood silver's going there? I'm extremely confident, 1,000% confident on a 100% scale. Silver will go visit 150 to 200. I don't think it's just going to rip up there in a matter of days or weeks or even months. I think it's going to take longer. But I'm also not convinced that this low, recent, slight higher low is the end and we're ready to go do that. Even though I'm confident we're going here, I'm not confident that this is the final low we need. So we drill down a little further and we go back to the daily and we can see we're below the magic Fibbo, we're testing. We need to get above that 618, recent high to low. We got to get above that 618-786 zone to set the tone for us to go higher. And as long as we stay below that high, that low, we stay below this, lower low is still more probable than ultimately breaking out. Although all roads lead to that 150, 200, this is still more probable. We still need a lower low. Amen? Any questions? So what if I nibbled right here and bought a little early? And this thing does go lower low. Add to your position, because again, whether you bought it in the 60s or low 70s, or you bought it right now at 70, but the low 60s over here, and you're up, great. Don't be surprised if it goes lower low before we then go breaking out eventually. But if it is what it is, we get above that and it kind of sets the tone, we're going higher, then we could still have a high, low, lower, high, lower, low on that bigger scale. Let me draw some fresh ones in here. Remove. I just got a ton of these just so you can kind of focus. That's for the upside. That was for some potential three-wave downside. Let me take that one off. But this recent high down to that low, we really need to get above 99/109 to set the tone. This is truly going to what? 140, 50, kind of my plan. This up here, 160/200, 150 to 200. That's where that comes from, these extensions. But I'm not convinced this is the low. I think we got to go lower low still. So this is a slight higher low. Still think we got to go lower low. Amen? As long as we stay below that, expect we're going to get one more push lower. And even if you bought some now and we go lower low, don't panic. Just add to your position. Goes even lower, add to the position. The lower it goes, the more I add, the more I salivate. And because if we can get anywhere near in the 50s or lower, whew, that's get on your knees and thank you for this thing to go ripping to 150 to 200. And last but not least, Bitcoin. Is that the end? Harold, like I said last week, this was the logical target we would go to, and maybe all we get, we start breaking down the 50 to 30,000 range, or we can maybe get a little bit more potentially, but I'm still not looking for a breakout. I'm looking for 50 to 30,000 range, and Bitcoin, we know, has done this cycle over and over and over. Every 4 years, you get a Bitcoin halving. 12 to 18 months, we go on a run, get a crypto winter low, 12 to 18 month halving, we get a run, low, halving, run, low, halving. This one did a little different. We broke the new highs before the halving because of the ETS, but we still made that run, topped out. Here's your buy zone, 50 to 30,000. Again, I can't tell you what to do. That's my plan. I'm buying Bitcoin and some ETF, buying all the above, crypto accounts, brokerage accounts, you name it, all the above. Hits 50, I'm buying. Hits 40, I'm buying a bunch more. It dips its toe into the 30s, I'm loading up, and I'm holding it till when? Fall of 2029. Why? Having 12 to 18 month run. So I'm going to buy in the 50 to 30,000 range, and I'm going to sell at the 200 and above range. And with that, I'll say good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor. Join us again tomorrow. That's it. That's all.